Okay, today I'm going to be going over a price study in the price diary today. And yeah, pretty much just starting off here. If you guys look at the chart or you look at what I'm looking at, sorry, the news, we can see that today we had this high impact news driver at 10 a.m. and this medium impact, which was CB consumer confidence. Don't know what that is. We'll look for it at 10, and the Richmond Manufacturing Index. All right. So the very first thing here we're gonna do, of course, let me just go ahead and get this to the 1 hour chart. So we're gonna look here at the daily. We're gonna see where we are. Right here on the right side, I've marked premium, or the premium, sorry, which is from this high to this low. Anything below this line is a discount. So currently we're in a premium. Now we have this again, this fair value gap back here acting as a form of resistance. I'm expecting price to trade into that before we see it continue lower, but I am expecting lower prices because we have a lot of untapped sell side below here. All right, now when we go on the hourly, we're looking at where is price likely to go, or where are we at within that range. Well, the very first thing, we have these relative equal highs all right here, okay? We see price traded down, and it traded to this inefficient delivery. I'm not sure if it would trade lower, to be honest. I'm not going to pick highs or lows, but looks like there's might be still some inefficient delivery down there. We'll see. It could take this buy side and then use that liquidity to go short and finish that for people that are expecting it to go higher. I'm not really sure, but we have these relative equal highs here, these relative equal highs here. Okay, and when we're looking at those highs, that's this candle here, which was previously taken. But what we see here, so we have, just one second, okay, just to make this clear. All right, so right here, okay, the high within this day, so that would have been this high. Wait, no, sorry, where's the high? Give me one second. Oh, okay, yeah, it's this high. Yeah, so this high right here, sorry, was taken soon after. So we have price moving at that point from a discount down here into a premium. Now we still have all these relative equal highs intact, and we have this larger displacement move. Okay, so what I'm saying here is price likely to go higher or lower? Well, let's go ahead and mark the range, the most recent low to the most recent high. Okay, so you can see here price let me make sure, sorry, I have it the wrong way. I think I meant to do it from this high to this low. But regardless, okay, it's the same thing. I just wanted to see where optimal trade entry was based on my bias. So here we go. Okay, this was make sure. Okay. Perfect. So this is today's price action, taking out yesterday's sell side and trading that inefficient delivery. Okay. So that's what we're seeing right here. Now, as I mentioned, it could trade down here again, and the reason I say that is also just because it looks like within this current leg, we're in a premium and it didn't move into a discount within this current leg. But from here, we had this low that was violated here, so it trades into a discount there. But then we measure this. We have these relative equal highs created, so then we're going to have that level of buy side liquidity taken. All right, let's just go ahead and I'm going to wrap this up here. So we're going to now go to our bellwether time frame. Okay, here we are on the 15-minute chart. Everything's a little more blank today. I did a lot of this while I was at work, but I'm going to go through just the levels here, and then we'll talk about some of the annotations I made. So we have this low here. The reason for this low was created here at 6:30. It's the closest low to the 8:30 open. Okay, right here above is the closest high to to 8:30. Okay, so the first thing I watched price do here is at 8:30. Okay, it's a trade below a short-term low, and it actually retrades up into a imbalance, continues lower, and obviously trading below these levels of sell side, and grabbing that liquidity there. From there, we have this displacement move. Okay, retracement back up to rebalance that large displacement. Oh, and look at this, 10 a.m. massive displacement upwards. So almost like a manipulation. Sorry. Oh, it's going up. It's going up. Look at all these relative equal lows. Yeah, like that's classic resistance. It's bouncing off that. I don't know if that's what people are thinking, but that would be my guess. All right. So, anyways, we have that news driver, and then of course soon after goes directly below that low and takes out that short-term low there, creating this low. Okay. Retraces. Oh yeah, it's gonna meet up back at this this resistance right here, this resistance level. It's gonna bounce off it. It's gonna trade here. All right, and then of course going lower, this is a time we don't trade. All right, but we can see that during lunch it's a retracement to the sell side where we had this low taken out. Then it seems we had these relative equal highs taken out around like 4:30 when I was marking this. Is when I had marked these levels. So like pretty much right here, I knew, even though it was after hours, that it was going to take this level of buy side, these relative equal highs. And if it's taking those relative equal highs, well, now where do we see trading to? We see here. But anyways, those are just the levels, okay? And then this is just from the London session. I had the London session lows here marked and the London session highs, which I believe to be our next target here. Okay, so anyways, we're going to go now to the 5 minute. Okay, here we are on the 5 minute time frame. Whew, okay, so tired. So on the 5 minute time frame, that's when we start looking for setups. So I started looking for market structure shifts. I'm going to go over a few of the ones I saw, one of those being here, but we're going to start that just on the 2 minute time frame. Not much is really going to change, and I don't really see a big reason to include that in the diary or price diary other than waste time. Okay, so here we are before the day. I want to mention this probably isn't something I participate in, but it's good to get a read on price, and even though we're not trading the shift, it's good to see what the market is doing and where it's going. So here we have this on a higher time frame. It makes more sense. This is a swing low, okay, and we have that created here. So this low is created. Now we have this created, okay. We have multiple different fair value gaps here. Let me also just change this to green, okay. We have these different fair value gaps up here. All right, boom. Okay. We have it price trades below an old low. Okay, so it does that. Now here's the issue here. It doesn't do it with massive displacement until a little later down here. Okay, but this really isn't massive displacement. Regardless, this is 8:30 open. At 8:30 open directly, it takes this level of sell side. Okay, creates this new low, and then we see price retrade to those old imbalances there. All right, so after that sell side liquidity is taken, okay, I was looking for lower prices here. Sorry, I'm trying to zoom out. All right, so here we have this low that is violated with displacement. See this massive displacement, and it creates this gap in this fair value gap. Sorry. That displacement creates the idea. Okay. We watch it trade up to this fair value gap, but that happens during lunch. Okay. And at this point right here, we're just paying attention to what price is doing. So we have then price go to that fair value gap. It uses it as resistance, and after lunch we see this level of sell side liquidity taken. So now that I see this level of sell side taken, okay, based on that, we see this level of sell side. Well, okay, let's see what price is doing. And here's what I watched. Okay, here we go. 2 o'clock. 2 o'clock. Oh, lower. Okay, so we're seeing price finally start to trade up. Let's look for displacement above an old high, and let's see what happens. Boom, I saw this. Swing high. Lower low to the left, lower low to the right. Okay? Boom. Price continues upwards. Alright? Displacement creates our idea, creates our fair value gap, retrades it. Entry. Boom. Here we go. Here, we have more inefficient price, this large fair value gap that's down here. Boom. Trade above an old high. Trade above an old high. And I'm sure when we go to the higher time frames, over here, there's different targets. I wasn't necessarily focused on a target, or entering a trade. Just marking that out, okay? And then lastly, we'll go to the 1 minute, and I'll wrap this up with a few last words. So here we go. This target down here, which was the fair value gap. Okay, traded to. Okay, so lower. Trade below. Short-term low. Displacement. Retrades to the fair value gap here. Continues for sell side. 8:30 open. Okay. False move up. Kind of a consolidation hurdle. This very, very back and forth price action. Boom. 9:30 equities. False move. Trades above this high. Takes buy side. Smoke screen. Okay. Boom. Continues lower. Trades below these relative equal lows. Trades to a level of sell side. Boom. Trades above that displacement high. Was created. Trades above there. Boom, this high created. Trades above that. This trades to the two previous fair value gaps. From there, we see it continue lower, below an old low. We have this fair value gap here. This displacement rebalances it just like the paintbrush analogy he uses. Trades to this fair value gap during lunch. Resistance. Continues lower. At lunch, we see that low taken out. We have a new low created. We see price start swaying after we've now taken sell side. We see price moving to buy side when we have this swing high here, okay, with displacement, with a fair value gap that's retraded, which then takes us into buy side, where we could exit above this high here, or I could even again go through here and look for fair value gaps for different objectives. But this high, or this previous high, is a good target because we have these highs back here, which of course those get ran out towards the end of the day. But that would have been a profitable trade regardless. All right, so that's all the logic on that. Now the very last thing, let's go ahead and compare inter-market relationships. So we're gonna go 15-minute. Okay, switch this to 15-minute. Okay. Give me 1 second here. Here we go. So 9:30 a.m. Okay. 9:30 a.m. Lower lows. Oh, let's see here. What price action did we have at 9:30 a.m.? Boom. 9:30 a.m. Lower lows. Okay, let's go to Dow Jones. 9:30 a.m. 7:30 a.m. Just 9:30? Hold on. There's no way this is real. Give me 1 sec. Wow. That is just, I'm sorry, this shit is so crazy to look at. So look, okay, what I just did here, I studied intermarket relationships. All right, there's a macro here which is telling price that it can't go lower. We see these other pairs in correlation, like the E-mini S&P creating lower lows. We also see that on the NAS, which it's not showing here, the NAS 100. Shit. Anyways, okay, look. Lower, lower, low. It starts at, I'm literally marking it from 9 o'clock. You don't see a lower low. You see here at 9:30, low created, higher low. All right, and then when we change this to the NAS, we see the same thing that we see here at the same time, lower lows. So what that essentially, that macro means is that's an indicator to us. Okay, to get ahead of the curve. We have this level of sell side being taken out on both frames, and the Dow says no. And the Dow instead, okay, goes all the way up here. It doesn't create a lower low. Very interesting to look at. So it's 1 in the morning. It's 1 in the morning and I have to be up in 7 hours. You know, it's a lot of hard work. It's been a lot of hard work. Thank you guys for watching. See you next time.